We have probably never seen before that after a jumbo rate cut by 60 basis points at once, the currency issued by the central bank went up. But that's exactly what happened yesterday. After the European Central Bank cut the refinancing rate from 4.25 to 3.65%, the single European currency showed no signs of a decline. On the contrary, the euro grew in confidence. Remarkably, the ECB announced the sharpest one-time rate cut in the entire history of the central bank. Although now all mass media, without exception, indicate that this jumbo rate cut was predicted, and this does not correspond to reality, because before the meeting itself, the figure of 4% appeared in all forecasts. The actual rate cut size was changed almost after the fact, and this sharp rate cut came as a bombshell. So the question arises about the subsequent growth of the single European currency. It's all about Christine Lagarde's comments. And during her press conference, she stated in plain text that she pushed the pause button to ease monetary policy further. In other words, the ECB does not plan to cut interest rates anymore this year. However, the market priced in the fact that monetary easing would extend over time. From now on, it's the turn of the Fed Reserve to lower its interest rates. In this context, the euro gained bullish momentum. However, interest rates in the United States are way higher than in Europe. Apparently, this situation will hardly change. The only question is the size of the interest rate disparity, and this fact will put pressure on the single European currency. So, as soon as the market recovers from the shock, the US dollar will most likely continue to steadily advance across the board. In the meantime, we see on the chart how the euro speculative growth enabled its rally by more than 80 points. At the moment, the level of 1.1000 serves as a support, relative to which the euro is extending its recovery. The euro is currently overbought in the short-term time frames. Thus, the recent rapid rally could overheat long positions. From a technical point of view, taking into account the euro's recovery, the rally so far is only about 50% of the scale of the correction. So, more bullish moves will follow. Thus, if the euro-dollar pair settles above 1.1100, the door will open to the level of 1.1150. Gold amazes traders with its new records. The precious metal has reached a historical high, touching $2,600 per ounce. The proofs how the market anticipates a rate cut by the US Central Bank, taking advantage of the US dollar's weakness. Demand for gold is growing due to its status as a safe haven asset in conditions of high uncertainty and geopolitical risks. The oil market is also benefiting from the dollar's weakness. The only thing that surprises traders is the pace of the Brent price recovery, especially in the light of its rapid fall. To sum up, the fact of growth, though slow, should of course resume the oil market. According to technical analysis experts, the oil trend remains downward. If the price slips below $70 per barrel, this could signal a new bearish phase in Brent crude in the future. The current upward scenario assumes only a partial recovery of oil prices. Today, the crucial event for the Russian ruble is a policy meeting of the Bank of Russia. The meeting ended up with a rate hike by 100 basis points. The key interest rate was raised by 2.19%. The attention of market participants is more focused on the press conference. Previously, Elvira Nabiullina never hesitated to speak directly about further increases in the interest rates. Now the situation has not changed. The policy statement reads that the Bank of Russia allows for the possibility of raising the key rate at the next meeting. The leading central banks are already actively easing their monetary policies, but the Russian economy is clearly showing signs of at least a slowdown in the GDP rates. The Bank of Russia remains interest rates at elevated levels. And this news, of course, weakened the position of the Russian stock market. Alternatively, the rate hike will gradually give strength to the ruble, but the ruble is likely to return to its previous range of around 92 per dollar. The fact is that due to the incredible scale of sanctions pressure, the Russian financial sector began to live by slightly different rules. On the contrary, high interest rates contribute to the weakening of the ruble. However, rate cuts can revive the domestic economy and contribute to the strengthening of the Russian currency. That's all we have for now. We monitor developments in the financial markets. Subscribe to the channel and stay up to date with the news with us. See you on Monday.